please do throw them in. Thought we'd have a look at support and resistance and trend lines and stuff, and we'll just start with a kind of bare chart. So if I pick this one, RPD 7, what I kind of really wanted to get across was around how to determine appropriately horizontal support and resistance. The reason for that is these are the most important areas on your chart. Really, where if you can pinpoint where the actual support and resistance zones rather than levels, they tend to be sort of smallish zones, if you like. If you can determine where they are, what they do is they show you areas of price acceptance or price rejection by the institutions. And that's really important, because this is where institutions are saying this price is acceptable to us, and then when it bounces off in terms of some resistance, then they're saying that price is unacceptable for us. So it's important to know that, because that's kind of going to either help kind of boost your setup if it's in that area, or it may cause you just to wait a few days or something to see what happens around there. Or it may, in other cases, make your setup a little bit marginal if you're just kind of encroaching on one of those areas. And particularly with the market now no longer being in a full uptrend, when we're looking at an uptrend in market like we have back in 2020, and for the most part of 2021. So the last 2 years, really, these things tend not to have that much prominence, because you're only really looking at one bit of the picture, which is where the actual support levels are. Now that we're into a much choppier market, where we've seen some serious declines in the valuations of some stocks, and some are trying to come out of that, then it's really important to use horizontal support and resistance and be aware of them on your charts. They're relatively straightforward to draw, and they're even more straightforward to check that you've got it right. And I'll show you a couple of tips and tricks around that, how to make sure that they're there. So first thing I want to do is kind of just define what the two types of horizontal support and resistance actually are. So the first one is major support and resistance. That is where there's been at least 3 areas in a chart where that has been tested. Now, for it to be properly a major support and resistance, it needs to be tested twice from one side and once from the other. So either it's bounced off it twice on the way up, and then it's come back down and tested it as a kind of pullback and validated that level, and then that level will then remain on that chart. The other type is minor support and resistance. These tend to be formed through the latest swing high or swing lows, or a cluster of pricing, but they are only valid at the right hand side of the chart. And that's a common mistake that people make. They put in these little, there's a good example here. If I was to draw this, at this point here, that is kind of, people would say that's a nice kind of support level. It's support, but it's minor because it's never been tested from the bottom. The only time it really gets tested from the bottom is here and here. So at this point, this is only valid, to this level here. Another example would perhaps be...
Stu, I'm sorry, could you say that again?
So it's only valid at the right-hand side of the chart. So once prices come through that, this level is no longer a valid level, really. You wouldn't consider that in trading, that level there. What you would do is, once it's kind of come through that's your most recent minor support level, and your most recent minor resistance level is here. Now, as we come down and bounce up and around here, then this comes back into play, because you can now then draw that across there. So this is now a proper horizontal support and resistance. This is a major level now because it's been tested there, there, and here. And potentially you could say that was a slight test of it there. I'm not sure that particularly count. I haven't drawn that properly yet, but I'll show you how to do that in a sec. But that's just an example of, don't get confused by levels way back here. When over here, it's the only ones that count are the most recent ones in terms of minor. So, if you're not bothered about, the major levels, the two most recent minor levels are here and here. Okay. And if this bounces up through there, then this one's probably invalid, and it's only this one. So
you're saying the major is when you can include the left side and the right side.
Yeah.
And minors are just on the right side.
Absolutely. They're the most recent levels from the right-hand side of your chart.
Okay.
So you just come back from this side. That's your most recent support level. That is your most recent resistance level. Nothing else matters. Anything of this stuff here is of no consequence. You're on the right-hand side of the chart. What is of consequences are the major ones. And if we kind of look back at this through time, I don't know how far back this one goes. Okay. We can start to draw some of these levels in. Now, candlestick, I use candlesticks, so the way you draw things on candlesticks, let's try and find some levels. So there's kind of one roundabout here, somewhere there, maybe. Yeah, so there's one. So if I was to take a line from here, the way I draw them is I use this tool here called the parallel channel, because they are kind of channels. But if I mark it at the top there, drag that across, and then move that up or down a little bit, and then zoom in. Oops. What you're actually looking to do, this is kind of in the wrong spot. With the candlesticks, it's the close that matters. It's not, ignore the wicks on a candlestick chart. I'm not so sure about the type of charts that you use, Mike, those little bar ones. It's probably the same. So that's that candlestick, and you can see where that kind of comes through. And this is a bit of a zone, so you maybe need to just drag that out a little bit, and so that it's covering your various closes. But that's kind of roughly your zone, major zone of support and resistance. And if we come back across, that is in there. Now,
yeah, the bars are basically the same thing.
Yeah, same thing.
Pretty much. Can I ask you one quick question about that indicator that you drew? Like, how do you have it reminds me so much of the trend spider, where you had like a buffer around the support and resistance level. How did you get that?
It's just this one here, parallel channel. So what you do is you, if I zoom right in, just draw a little one here, draw up here. So you click to start it, and then draw it to where it is. I press shift, so I've got a straight line, and then you click at the end, and then you drag it up or down. So it's like kind of 3 clicks, just like that. And you can adjust it. Obviously, you can move it around, or you can shrink or expand the zones.
That's clever. Thank you.
That's the one I use for my kind of majors. The best way, and I'm going to show you a chart now. It was you that kind of, when I was looking at this, it was the chart that Tish put up the other day. It was, forgotten what it's called now. It was LAC, wasn't it, Tish? I think.
Yes.
Yeah, it was. Yeah, yeah. So if I zoom on this, so this looks a little bit messy and choppy, and if I go to here, let me see. So let me make that big for you guys. So there's a couple of actual proper support and resistance channels there. Now, the way you can actually check whether you've got them in the right place or not is quite simply flip to a line chart, and your support and resistance levels should touch all those particular bounces. So that bounce there, zoom in a bit, or you can zoom in there. So that touched there and touched there, but if I flip that back to candles, you can see that it perfectly goes across the closes. Yeah, I'll zoom out again. So, and if you need to adjust, you can move them about that way to make sure that you've actually got them lined up. But when I've started drawing these properly, this one's just a touch out as well. You can see now you've got your bounce, so on. I used to kind of get them wrong and they were out by a little bit, and that's where it kind of it's a good way to check it. You can also flip onto a weekly chart as well, just to see where it's bouncing up on the weekly, and you can see that these things line up exactly on the weekly chart. And if you get that right, those are your major resistance, and this is where the institutions come into play, because this is where they're saying we accept the stock at this price, but we're rejecting it at this price. So what does that tell you then about a trade that you're trying to do? Back to here. So I think, Tish, you were looking to buy in around here somewhere, but you're getting quite close to where the institutions want to sell this.
Right.
If you want to buy it, you should try and buy it down here. And it's a bit like what Chet was saying earlier, is you want to buy it as low as possible because these things are kind of stalling out. Now, this may well come along here and break through and off we go. In which case, this is the level you should be interested in to see if you get a break above that, then that's probably a reasonable trade to take. Now, the other key thing about these levels as we move forward is that I'll find my path chart tool here. So what tends to happen is a stock will, when it finally breaks through there, will go up, but then they often come back down and test. And this is the old second cheese I guess strategy that's been mentioned on this forum a few times, and it's one that I quite like, and this is your classic pullback buy when you're buying it when it does that sort of thing.
It's the second mouse theory.
Second mouse, or what do I call it? Second cheese. Or second mouse gets the cheese, doesn't it?
Well, I was going to say that's what Weinstein talks about in his book.
Okay. So, but the other thing to note is if you make these, so this is one thing to be aware of, and what often it also happens is you get these, I don't see one on this chart particularly, I suppose you could say this is, well, you can see it here actually, it came up and it rejected this high here, and it slowly pulled back in, and this is a really nice kind of pullback, bounced off your 50 period moving average really, then broke up above it, came up, and then pulled back in, and that's that kind of second mousey type thing. And I did it again here, up, back, down, up, because that's the way the market goes, and it's much the same as when it broke down through this. It came up, flirted around here for a day to catch people out, and then it dropped back down again. Then it came back up again, tested it again, and down. And this is setting us up in a classic range trade down here. So, the high probability trade at this point is, if nothing else changes in the market, is that it'll bounce up there, sell off, and come back down here again. But on another note, this is where you get your VCP patterns between these kind of levels. So this is where you tend to get that down, up, down, and then out. And that's where your classic VCP comes in. And this is your Mark Minervini piece. So if you're looking at those sort of VCP type things, then you've got to be looking at the right stocks to start with, but then you want to get those levels dialed in so that you're then looking for that VCP happening within there. And that's your kind of high probability move there at that point. So what you often look for with trade entries and things like that is, particularly in this market, is what is happening around these levels. And if it comes up and you get this sort of slow drift down 3-5 days and then up, then that's generally quite a good entry. But expect it to come back down and test this again. So make sure that's in your trading plan. There's nothing wrong with taking a bit off as it comes up and out, and then having your stop pretty much here at break even or just below. And kind of expect that to happen. So that kind of helps give you that boost on it. I've kind of wasted this chart a little bit, so I'll flip back to here. The other thing I just wanted to mention was trend lines. I know there's sort of purists out there who, go connect to highs. So, in that case, that would be a trend line. Or before that, it might have been that. I've often found, much like doing that a support and resistance line, I connect the closes if I can, which tends to give you a more realistic option of a trend line. And sometimes you could even look at these in a way that actually makes a bit more sense, and take out some of those outliers, if you like, so that you get a trend line that's probably more fitting to what's actually going on. That's for those longer trend lines. And also, I think the other one is these sort of short-term trend lines is one of the things that I look for. I haven't got any AMAs or anything like that on this chart, but this would be the sort of typical action that I look for when I'm entering a trade. So you would start to see something down there like so. That would give me an entry in there, but you can also see that you're getting those higher lows coming in, and so I think there's nothing wrong with just having little trend lines that show you the general direction of movement. So this one's showing me I've got higher lows creeping in here, so this is a good point to enter, and then that downtrend is there being broken at that point. So you get on that candle or that one, probably about there maybe, and go up. So I want to say make sure I've covered everything else. Yeah, action about. So minor. Let's look at minor support. So the action that tends to happen. So as I've said, the major stuff it tends to be about VCPs, pullbacks. That kind of tight pause, those very neat little flags that you would get for 3 or 5 days or something around major support. Around minor support, what you tend to get is reverses or pauses. So let's see if we can find one of them somewhere. So yeah, so if we were coming along from this side of the chart here, so this would be, I'll find a line in there. So if we were looking at this trade, we haven't seen these candles yet. This would be our minor, possibly minor resistance, and we could expect to see a little bit of a pause or a little bit of tightening action around that particular level. And sure enough, as we do it, it comes in and it does that, and it also then does a little pullback into that level. So again, it's bearing that in mind, and that's just because that's your most. If you were here, you haven't seen all this. This is your most recent high, and this is your most recent low. And then as we go up, we see the similar things starting to happen to each of those. And we advise you go back and study your charts and look at those and maybe replay them. Again, you know, we expect something to happen around here, and we expect something to happen around here. We're no longer interested in anything else that happened previous to that. And what you will tend to find is those little periods of pausing action, maybe a reversal candle or two at that point as well, and that's what you need to start to, you know, to look at lightening up in your position size or whatever.
Stu, why wouldn't you consider 24 and change, where you have that from the high back in September? Why wouldn't you consider that major support and resistance?
Well, it may well be. I just haven't drawn it out yet.
Okay.
It could well be. I really 1, 2. Yeah, it likely is. There's probably a zone in there, to be honest with you. If I drew that across, you know, you're probably looking at somewhere around there. That, you know, that looks pretty good to me. Just check it. Yeah, more or less. You could move that up a touch. So yeah, that is kind of a good zone. Kind of got another one here as well, 31.5.
But you were saying that wasn't major support until the rest of the days showed up as
It wasn't until this point here.
Yeah.
Yeah. At this point here, it then becomes a major support level because we've got 1, 2, 3, and we've got, you know, 1, 2 from the downside and 1 from the upside.
Mm-hmm.
And now we've got
So
2.
let's say you were watching this and it's January. Are you looking back at that area that you would say minor support to look to see if support comes in January?
Let's jump to, if I say so, November, December, January. Here we are. Right. 1 in. Yeah, right. So that's January. Yeah, at this point, if I take that off, at this point here, what we've got is our most recent lows here. There's no major support there. It's shaping up to become that. Got 1, 2 touches. Got 1 there and 1 here. But it's not there yet. So that's our most recent low. And I wouldn't count that kind of, but that'd be our most recent high. So it'd be there and there. Does that make sense? I mean, all this stuff is subjective anyway, so. But.
You know, I'm just curious the way your mind works when you have, before it really gets tested multiple times, and then it turns out to be an area where there are substantial buyers.
Yeah, yeah.
So
the only 2 levels at this point here that I would be looking at is this may be one if I went back a bit. I'm not sure. Yeah, but this potentially area here is, you know, 1, 2, 3. That's probably my major area. You know, in here. You know, that's kind of what I'm looking at as the major support here. You know, 1, 2, 3 touches. And these are the two areas that I'm looking at because they're my most recent areas of minor support, minor resistance.
Wouldn't 24 be the support?
There?
Yeah.
Not really, because this is my most recent swing low.
Well, I mean, looking at the chart at farther out, doesn't it seem like 24 is support because it's hit that point twice?
Yeah, it's got there and there. Yep. I mean, you could do if you want,
I'm
but
looking back even farther, earlier in the year.
well, yeah, that may well be the case. Yeah, well, yeah, I mean, once, twice, 3 times. Yeah, you could make that argument. So I didn't have. This is not a chart I'm trading. It's just one I threw up. So
Okay.
I would spend a bit more time on it if I was actually trading it at the moment. But yeah, even at that you could say that is your major level. So it's your nearest major level, and then you've got minor and minor. So I would expect something to happen around here, a bit of tightening action, and or possibly a big reversal candle, and much the same here. This is where I would expect to see a lot more volume and all that kind of stuff popping in there. Plus, you might get a VCP coming down to that, but you'd expect to see a significant reaction off of this. Whereas these minor support levels may or may not come into play. They're just they are what they are. They're just the minor. So this is not likely to be affected too much by institutional ownership. This is.
Just as an aside, that's a beautiful cup with handle right there.
Actually, when you look at it, it is, isn't it? Yeah. This here.
Yeah, right there.
Yeah. I don't know why we didn't see that one at the time.
Well, it's in the metals.
Yeah,
and
me too, Stu.
It's in the metals and mining group, which is performing well right now. So makes
yeah.
sense.
Yeah. Cut that. Oh, Trading View doing its usual thing. Flip back to there. Yes. Oops. Right, if I X out of that, yep. Takes us back to where it is just now. So anyway, I hope that has been somewhat helpful. I'm super happy to take any other questions on it, but anyone else?
That was great.
Nice, Stu. It was very good. Thank you.
Yeah. I think the one thing is remember just hit that line button and just check things, and then sometimes it's useful to check one time frame up, and if you want one time frame down, but it's so much easier to see them on this, and then certainly with candlesticks, remember ignore the wicks when you're drawing those horizontal lines.
Yeah,
So when you're looking at a zone of support, do you go by like a percentage up and a percentage down from the line, or are you just kind of eyeballing it?
I just eyeball it. I try and cover off the wicks within my zone, if you like. So that's why I like this little indicator that I use, which is this what do you call it, parallel channel. So the line tried to cover off the actual closes, and then the zone tends to be how big are the wicks around that zone. That's just how I do it.
Stu, yeah, this is Sal. The way I do it is when I look for my price levels, I normally start with the largest time frame, the monthlies,
Mm-hmm.
and then I drill down to weeklies and dailies to see how many touches are on that line.
Yeah.
How if I see see your confluence, on weekly, daily, and monthly time frames for major areas of support.
Yeah, I mean that's a really strong one if it's got all three of those, for sure.
Right.
Yeah, definitely. Yeah. Okay, I'll move on. I know I promised everybody I would do a trading account update at the end of each month, but I'm kind of missed last month, so go to here. So I think I need to make this bigger, don't I? Because trouble seeing it. There it is. View 125. That works. People see that?
Yes.
Yeah. So I put two graphs on. So my equity curve and P&L. You can kind of see how my system works. It kind of, we were in a very slight drawdown up until middle of January somewhere, 18th of January. Then we got a wee bump up and then slow down, bump up, slow down, and then we had 3 shorts all paid out on the same day, which gives that nice bump up and then slow kind of drift up really. So reasonable so far, just short of 12% annual gain. So you can see how my so I had 2 losses in a row. So I always start off red, obviously a red position size, which is essentially a third of my account, a third of a normal position. So it stayed red all the way up until February the 16th. Because what I do is, when I get 3 wins in a row, then I'll move to amber. So I had 3 there. That one was taken in between times, and then I switched to amber, and it just so happened that coincided with the shorts. So I got 3 shorts, they all paid out. So then I went green, which is full position size. I did make a couple of comments, so I'm going to zoom back out now. So my kind of comments are really were round about that. The February, the deep pullbacks were working. Higher lows are the key at the moment, so you need to make sure you get that in. But long setups were fading after 3 days, and then I kind of, so that would be about 16th of February. Then within a day or two, I just decided to go full bear. 3 shorts that I took, they all paid out quite handsomely. Then I did square as a short that paid out reasonably well. At that point, I compounded my gains. So every time I make 10%, I up my, because my position sizing is based on, essentially 30%, 60%, and 100% of a full position. So up my baseline account, so my sizing's increased, and I'm on green as well, so that's allowed me to make some gains. And the only one I'm in just now is land, which is another deep pullback long, which seems to be working again. So that's it on my US account. My UK account, I've not done anything really since 23rd of Feb. I've actually had 7 winners in a row in that, which is almost unheard of. But yeah, the last one was a scratch trade, obviously. But yeah. But again, you can see I did 3 red trades. They were all winners. So then I go to amber, 3 amber trades. They were all winners. So I'm now on green on both accounts.
You're doing a hell of a lot better than me this year, Stu.
Well,
You're doing great.
Do you know, it's kind of surprising that I've, because at the end of January I thought, oh crikey, it's not good at all. I was just like 0.4% or something, and just basically break even. But yeah, but then you can see how just you get a couple of decent trades, how they lift your account essentially. I mean, this vet one that pulled me out of the hole that I was in and paid for all those losses. So still basically flat. And then APTS made 10R on that, and that all of a sudden that's what gets your account moving. Then not much happening really, and I mean that's essentially a break-even trade for another one, kind of tiny wee loss. But then you get something like Bug, where you got 8R on that short. So and then that one, forget the R on that, it's because that's because that was a futures trade, so that the R numbers just don't work on that. But yeah, but yeah, you only need a few good ones. It won't continue like this. So there'll be a fair spell of losers in it as well. But while it's the reason that I scale up and out so quickly is because when I'm picking winners like that, then you want to get your money in as quick. And then as soon as I get 3 losers in a row, I'll be scaling back down.
So your longest day held is 11 days. Is that just your system, or is that the market?
That's the market that takes me out. So
Gotcha.
Yeah, they're all quite short. I mean, my average hold is about a week and a half to 2 weeks. But it's the type of stocks I trade. I'm looking to put my money into the stocks that have got the biggest chance of moving quickly. So, but that's just my style and system. So, anyway, that was it. So I'll pass back to you now, Mike, unless you get any questions.
No
I
question.
have a question, Stu.
Okay.
You switched over. I have a question, Stu. This is Sal. You switched over to shorts, and I'm just wondering what made you pick the shorts that you picked in your system. And it looks like you went with large size as well. So you were there's a lot of conviction there.
Yeah, well, the size is just a rule. So
Okay.
if I had no winners, because I got those 3 winners in a row, that's why I sized up. Okay.
Right, but you sized up. Those were long positions, right? But then you turned around, you went short. And I'm just curious about how you quickly switched to short, and you also kind of sized up on short.
It just just because that's my system, it makes no difference whether a trade's long or short. My risk management has got nothing to do with my trade selection. You get me?
Yeah.
So I'm looking at setups and trade selection. My risk management is a completely separate thing. So I'm basing that on my performance so far, which is going to. So I just keep them separate.
I see.
It just means a slightly bigger, double the size of a loss rather than a $2,000 loss. It's a $4,000 loss or something. So it's not. But I'm only doing it because I'm. This is the whole point of, scaling in to a market, and the whole point of that, you're recycling that risk. Because you might think because you take a bigger position, you're taking more risk, but you're not, because it's the previous profits that are at risk, and only a small portion of them. So you're not actually risking anything from your particular account as it started the year. You know what I'm saying?
Yes.
That your capital is protected, but because you are starting to show signs there, you're 3 winners in a row, albeit one was pretty much a scratch trade right there. It still counts as a winner, so I'm going to scale up. And then as soon as I get 3 reds, then I'll scale down. That's just how I use it. It is those 3 in a row are my signal for my risk management side to scale in or scale out. But it's also how you can start with very small amount of risk, which is a third. My risk formula is there, so it's essentially based on a 5% stop and 3% of 0.3% of my account. That's what I started risking, and that's just how you build it up. A lot of people think that because you're risking a very small amount, you're never going to make any money. It's not the case. Any other questions? We can review it again at the end of this month and we'll see how position has changed or not. Okay, right, Mike, over to you.
All right.
Thanks, Stu.
You're welcome.
Thanks, Stu.